6:22 a.m., June 14th, 2026. Coral Gables, Florida. 4 unmarked DEA vehicles turned off Alhambra Plaza and stopped in front of a 2-story stucco house with a terracotta roof and a sprinkler system still running across the front lawn. 17 federal agents stepped out onto the pavement. Estimated total moved through the structure over 17 years, $61 million. The man inside was 73 years old. He had a retirement portfolio, a boat moored at Dinakey Marina, and a grandchild in 2nd grade at Coral Gables Elementary. He had not worked in finance since 2014. None of that mattered at 6:22 in the morning on June 14th, 2026. The warrant had been cold for 17 years. It wasn't cold anymore. What makes this case different from a standard financial crimes investigation isn't the dollar amount. $61 million is significant, but not exceptional for a federal money laundering prosecution. What makes it different is the gap. 17 years between the original case and the moment a compliance analyst at a mid-sized Miami bank noticed a number that didn't belong. 17 years during which an estimated $61 million moved through a structure that federal investigators had dismissed as a clerical error in handwritten case notes. The error wasn't clerical. It never was. To understand what happened on June 14th, 2026, you have to go back to a different morning in a different Miami, March 2007. A DEA joint task force operating out of the Miami Field Division had spent 14 months building a case against a Colombian bulk cash smuggling network operating across South Florida, the Caribbean, and into Central America. The network moved physical currency, bundled in vacuum-sealed packages, concealed inside legitimate freight, occasionally carried by human couriers, from street-level drug proceeds into the formal banking system. The operation was called Operation Seagate. By the time the task force moved, they were confident they had mapped the network completely. 9 individuals arrested. $14 million in currency seized from 4 locations across Miami-Dade and Broward counties. 2 vehicles. Documentation for 3 shell companies. The case was prosecuted through the Southern District of Florida. 7 of the 9 defendants entered guilty pleas. The remaining 2 were convicted at trial. Sentences ranged from 4 to 11 years. The lead agent on Seagate, a DEA supervisory special agent named Gerald Moffett, testified at both trials. He retired in March 2011 after 22 years with the agency. The case file was archived. The investigation was closed. One subnetwork was never identified. That fact would not become clear for 17 more years. The handwritten notes that would eventually reopen the Seagate file were never entered into the DEA's case management system. They existed in physical form only. 11 pages of handwritten observations that Moffett had made during a wire intercept review session in January 2007, 2 months before the arrests. The notes included account routing information, a correspondent bank identifier, and a question Moffett had written in the margin and then crossed out. Panamanian routing, clerical or separate channel? He crossed it out because the case supervisor told him to focus on the domestic currency seizure. The Panamanian routing code didn't match any account in their active target set. It appeared in a single wire intercept. One appearance in a 14-month investigation generating thousands of intercept documents. It was easier to call it a clerical error than to open a second international financial investigation on the eve of a major arrest operation. So it was called a clerical error. And the file was archived. The routing code. A 6-digit correspondent bank identifier assigned to a Panamanian institution. Continued operating for 17 years after Moffett crossed out his question in the margin. Valeria Sandoval had worked in compliance at Meridian Regional Bank in Miami for 6 years when she sat down to conduct a routine AML audit review in November 2025. Meridian was a mid-size institution, 11 branches across South Florida, a commercial lending portfolio weighted toward real estate and small business, and an AML compliance team of 9 analysts responsible for monitoring transaction activity across approximately 42,000 accounts. The audit Sandoval was running that week was not unusual. It was a quarterly review of flagged transaction clusters, accounts that had triggered automated monitoring alerts but had not yet generated a formal suspicious activity report. Most of these reviews produced nothing actionable. The alerts were typically explained by seasonal business patterns, one-time transfers for real estate closings, or irregular payroll timing at small companies. Sandoval would review the flagged cluster, document her findings, and close the alert. She had done this hundreds of times. What she found in November 2025 was not explained by seasonal business patterns. 3 limited liability companies, Asta Capital Management LLC, Velasquez Distribution LLC, and Blue Meridian Consulting LLC, had each been generating outgoing wire transfers of $8,400 at irregular intervals over the preceding 22 months. The transfers went to different recipient accounts. The intervals were irregular enough that no single transfer had triggered the automated monitoring threshold. $8,400 was well below the $10,000 currency transaction reporting threshold, below the common SAR trigger points for structuring. But the pattern across all three companies, viewed simultaneously, was unmistakable. The three LLCs had been incorporated in Delaware at different times. Asta Capital in February 2022, Velasquez Distribution in August 2022, Blue Meridian Consulting in January 2023. All three shared the same registered agent, a Delaware incorporation service called Piedmont Filing Associates. All three had opened accounts at Meridian Regional within 6 weeks of incorporation. All three listed the same contact telephone number, different area codes, but the last 7 digits were identical across all three accounts. I spent time going through the structure Sandoval had documented, and one detail kept nagging at me: the registered agent. Piedmont Filing Associates was a legitimate Delaware incorporation service used by thousands of companies annually. But the specific agent of record assigned to all three LLCs was the same individual, a man named Daniel Ferris, who had been Piedmont's registered agent for the Asta Capital account. When Sandoval pulled the original incorporation documents, she found that Ferris had also been the registered agent of record for a shell company called Asta Holdings Group, an entity that had appeared in the Southern District prosecution materials from the 2007 Operation Seagate case, not as a primary target, as a tangential reference. One paragraph in a 60-page indictment. Sandoval did not know about Operation Seagate. She had been 17 years old in 2007. She had not worked in compliance in 2007. She had no reason to know the name Asta Holdings Group. What she did know was that the pattern she had documented, structuring below reporting thresholds, shared registered agents, consistent transfer amounts across multiple corporate entities, met the criteria for a suspicious activity report. She filed the SAR on November 18, 2025. The report landed in FinCEN's database. From there, it was routed to DEA's Miami Financial Investigations Unit, which had standing monitoring flags on SAR filings referencing certain geographic patterns and transaction structures associated with Colombian bulk cash typologies. The Miami Financial Investigations Unit assigned the SAR to a financial investigator named Thomas Ochoa. Ochoa pulled the SAR on November 21st. He read Sandoval's analysis. He noted the Delaware registered agent connection. Standard procedure at that point was to run the registered agent name and associated entity names through DEA's case management database. The search returned one result: Asta Holdings Group, Operation Seagate, Case Archive. Southern District of Florida, 2007. Ochoa pulled the Seagate archive file on November 24, 2025. The physical file, including Moffat's 11 pages of handwritten notes, had been stored in DEA's Miami Field Division records room since the case closed in 2008. Ochoa had it scanned and digitized within 48 hours of pulling it. The Panamanian correspondent bank routing code that Moffat had crossed out in January 2007 appeared in those notes on page 7. It was the same routing code that appeared in the wire transfer records for 2 of the 3 LLCs Sandoval had flagged. The same routing code. 17 years apart. Ochoa walked into his unit chief's office on November 26, 2025, and put the comparison on her desk. Unit Chief Diane Farrell read through both documents. She read them a second time. She sat back in her chair and said, according to later court filings, only, pull everything. Here's what this case tells us about financial crime infrastructure. The most durable money laundering structures aren't complicated. They're patient. They move slowly. They stay below thresholds. They use legitimate intermediaries. They don't change what's working. The $61 million that moved through this structure did so in increments of $8,400, routed through a correspondent bank in Panama over approximately 2,000 individual transactions spanning 17 years. No single transaction was remarkable. No single quarter was remarkable. It was the aggregate that was catastrophic. And the aggregate only became visible when someone looked at 3 accounts simultaneously and noticed that the last 7 digits of a contact phone number were identical. That was the only mistake. A phone number. The investigation that Farrell authorized on November 26th ran through the end of 2025 and into the spring of 2026. Ochoa built a team of 6 financial investigators from the Miami FIU, added 2 analysts from Homeland Security Investigations Financial Crimes Unit, and requested a dedicated assistant U.S. attorney from the Southern District. The AUSR assigned to the case was a financial crimes prosecutor named Rachel Voss, who had previously prosecuted 3 SDFL money laundering cases in the preceding 4 years. The core objective was to reconstruct the full transaction history of the Panamanian routing code across the 17-year period. That meant issuing legal process to the correspondent bank in Panama, a process that required coordination through the Mutual Legal Assistance Treaty Channel, which added weeks to the timeline. It meant subpoenaing records from Meridian Regional Bank for the 3 flagged LLCs. It meant tracing the beneficial ownership of those LLCs past the registered agent to the actual human beings controlling the accounts. The registered agent trail led, eventually, to a corporate services firm in Miami. The Miami firm's records, subpoenaed in December 2025, contained account setup documentation for all 3 LLCs. The documentation listed a contact individual for compliance correspondence, a man named Raymond Castellano, with an address in Coral Gables, Florida. Raymond Castellano had retired in 2014. Before retirement, he had worked for 26 years as a vice president at Continental Trust Bank, a Miami area institution that had been acquired and dissolved through a series of mergers by 2011. His role at Continental Trust had been in international wire operations. Specifically, the management of correspondent banking relationships with institutions in Latin America and the Caribbean. Continental Trust Bank had been one of the financial institutions referenced in the Operation Seagate prosecution, not as a target, as a transaction processing institution. The bank through which certain wire transfers had been routed had maintained a correspondent relationship with Continental Trust. Raymond Castellano had been the relationship manager for that correspondent account. In 2007, when Operation Seagate agents had contacted Continental Trust as part of their investigation, Castellano had provided documentation confirming that the transactions in question appeared consistent with normal business activity for the correspondent relationship. The investigation accepted that assessment and moved on. Castellano had not been interviewed as a subject. He had been interviewed as a records custodian. He had processed the transfers from both sides. This was what Ochoa meant when he later described the discovery to colleagues as the moment the case changed shape. Castellano wasn't a peripheral figure. He wasn't a passive facilitator. The evidence that accumulated through December 2025 and into January 2026 indicated that Castellano had been an active architect of the correspondent channel from its inception, that he had specifically structured the routing pathway through the Panamanian institution to avoid direct connection to the Colombian network's known accounts, and that he had continued managing the channel after leaving Continental Trust, using the 3 Delaware LLCs as the domestic receiving infrastructure. The obstacle the investigation hit in January 2026 was the MLAT response from Panama. The Panamanian Correspondent Bank had changed ownership twice since 2007. The current institutional management had no direct records access to transactions predating 2015. What records existed from the earlier period had been partially digitized during the 2015 ownership transition, but the digitization had been incomplete. Roughly 40% of the pre-2015 transaction records existed only in physical archive form, stored at a warehouse facility outside Panama City. Ochoa's team had 2 options. Wait for the Panamanian authorities to physically retrieve and scan the warehouse records, a process that could take months, or reconstruct the pre-2015 transaction history from the domestic side, using correspondent bank records from Continental Trust's successor institutions. They chose both simultaneously. The domestic reconstruction took 11 weeks. Continental Trust had been acquired in 2009 by Southeastern Financial Group, which had subsequently been acquired in 2013 by a regional bank holding company based in Atlanta. Each acquisition had triggered a records digitization effort. The DEA subpoena chain required separate legal process to each successor institution. The Atlanta holding company's records department ultimately produced 847 pages of correspondent transaction records covering the period from 2005 through Continental Trust's full integration in 2013. Within those 847 pages, investigators found transaction records matching the Panamanian routing code for the period from March 2007, the month Seagate arrests were made, through December 2012. Consistent outgoing wire transfers. Consistent amounts. Consistent destination accounts. The structure hadn't paused for a day after the Seagate arrests. It kept operating without interruption. You'd think the arrest of 9 network members would have disrupted the financial infrastructure. It didn't. Because the financial infrastructure wasn't managed by any of the 9 individuals arrested. It was managed by a retired bank vice president in Coral Gables who had never been identified as a subject, who had sat across from DEA agents in 2007 and confirmed that the transactions looked normal, and who had then continued processing those transactions for another 17 years. What do you think? Did the regulatory system fail here by not identifying Castellano in 2007, or was this the kind of oversight that no compliance framework can reasonably prevent? By the end of January 2026, Ochoa's team had reconstructed approximately 70% of the full transaction record. The estimated total moved through the structure: $61 million over 2,134 individual wire transactions spanning from November 2005 through October 2025. The most recent transaction had occurred 47 days before Sandoval filed her SAR. The structure had been actively processing transactions while it was being investigated. The case was ready for a warrant package by mid-February 2026. Voss and Ochoa presented the affidavit to ASA review in late February. The warrant application named Castellano as the primary subject and identified 3 additional individuals: the beneficial owners of the Colombian source funds, 2 of whom were residing in South Florida, 1 of whom had not been located. The third individual, identified in court documents by the initials MV, had last been located in a Colombian coastal city. DEA's Bogotá country office had been notified. No active location had been established as of the warrant filing date. That was the first unresolved thread. MV remained at large. The second unresolved element was the full scope of the receiving side. The 3 Delaware LLCs, Asta Capital, Velasquez Distribution, Blue Meridian Consulting, had been the domestic receiving accounts identified from Meridian Regional Bank. But the Panamanian transaction records, when they arrived in March 2026 from the physical warehouse retrieval, showed that the routing code had connected to 11 distinct domestic destination accounts across the 17-year period. The investigators had identified 3. 8 remained untraced as of the warrant package filing date. The 8 untraced accounts represented an unknown additional volume of funds. The $61 million estimate was based on the 3 confirmed LLCs and the reconstructed Continental Trust records. The true total could be higher. One detail from the case file stayed with me long after reading through the warrant affidavit. On page 44 of the affidavit, there's a line documenting Castellano's 2007 interview with Seagate investigators. The agents who interviewed him noted in their report that he had been cooperative and forthcoming, that he had produced documentation promptly and without resistance, and that his explanation for the correspondent transactions was consistent with established business practices. The interview lasted 45 minutes. Agents thanked him for his time. He had been managing the routing channel for 2 years at that point. He would manage it for 17 more. The operational planning for the June warrant execution began in late April 2026. The challenge, and this was the problem that took the longest to resolve, was geographic coordination. The simultaneous warrant targets were in 4 states: Florida, Georgia, New Jersey, and Texas. The 2 South Florida subjects, Castellano in Coral Gables and a second individual at a residential address in Hialeah, were DEA Miami's primary targets. HSI was handling the Georgia target, a second-tier financial facilitator who had provided incorporation services for several of the 8 untraced LLC accounts. The New Jersey and Texas warrants were for document production at financial institutions with records relevant to the untraced accounts. The simultaneous execution requirement was non-negotiable. If Castellano or the Hialeah subject learned that law enforcement had moved on any other element of the case, they would have time to destroy documents or move assets. Voss had built the prosecution strategy around the physical documentation still held at Castellano's residence. Specifically, the original Continental Trust correspondent account documentation that Castellano had retained after leaving the bank, which investigators believed he had used to manage the routing channel through the ownership transition period. If those documents were destroyed before the warrant was executed, a significant portion of the pre-2015 transaction record would become circumstantial rather than documentary. The warrants were signed by a federal magistrate judge in the Southern District of Florida on June 9, 2026. Execution was scheduled for June 14th. The night before the operation, the surveillance team on Castellano's Coral Gables residence reported an anomaly. At 11:47 p.m. on June 13th, lights came on in the residence, all of them, according to the surveillance log. The exterior motion lights, the garage lights, the second floor. Castellano appeared briefly at a downstairs window. Then the lights went off again. Ochoa was notified at 11:52 p.m. The surveillance team confirmed no vehicle had left the property. No incoming vehicles. No phone activity on the numbers they were monitoring. Whether Castellano had been tipped off or whether it was a coincidence. An elderly man waking up at midnight, checking the house, going back to sleep, was a question the surveillance team could not answer. Ochoa made the decision to move the execution time from 7 a.m. to 6:15 a.m. At 6:22 a.m. on June 14th, 2026, 4 unmarked DEA vehicles rolled to a stop in front of a 2-story stucco house in Coral Gables. 17 agents stepped out onto the pavement. A secondary team of 6 agents was staged at the rear of the property. The front door was answered 40 seconds after agents knocked and announced. Raymond Castellano was in a bathrobe. He did not resist. He did not speak. According to the arresting agent's report, he stepped aside from the doorway and allowed agents to enter without being asked. The search of the residence took 3 hours and 47 minutes. In a home office on the second floor, agents found a locked metal filing cabinet. Inside, 14 accordion folders containing physical documents spanning from 2003 through 2013. Wire transfer authorizations, correspondent bank account maintenance records, contact information for intermediaries in Panama City. A handwritten ledger, 43 pages, documenting outgoing transfer amounts, dates, and coded destination references going back to 2005. The ledger alone covered 1,247 individual transactions. At the Hialeah address, agents found the second subject, a 51-year-old man named Victor Suarez, who had operated a tax preparation business as a front for the LLC formation infrastructure, feeding documents into a paper shredder. He had managed to destroy an unknown volume of materials before agents entered the property. He was placed in custody immediately. The shredder and its contents were seized and transferred to the DEA forensic lab for analysis. How much Suarez had destroyed before agents entered is not known. That material is gone. The Georgia execution by HSI, simultaneous at 6:22 a.m. Eastern, was clean. The subject there, a corporate services administrator named Patricia Holt, who had served as the formation agent for several of the untraced LLC accounts, was taken into custody without incident. A laptop and 3 external hard drives were seized. Here's the take that will probably draw some disagreement. Castellano's sentence, when it comes, should be measured against what he actually did, not against the dollar amount alone. $61 million in laundered proceeds is the number that will appear in the indictment, in the press release, in the headlines. But the more significant figure is the 17 years. 17 years of active concealment. 17 years of continuing to process transfers after sitting across from federal agents and confirming that everything looked normal. The dollar amount is the product of time. The time is the crime. Any sentencing framework that doesn't account for the deliberate duration of this concealment is measuring the wrong thing. Castellano was transported to the DEA Miami Field Division. He was processed, photographed, and brought before a federal magistrate judge for initial appearance on June 14, 2026. The charges: conspiracy to commit money laundering in violation of Title 18, United States Code Section 1956, bank fraud, and obstruction of a federal investigation. The last count based on his 2007 interview with Seagate agents. Bail was denied. The magistrate cited risk of flight and the international scope of the alleged financial network. Suarez made his initial appearance the same afternoon. Bail was set at $400,000, secured. He posted bond on June 17th and was released pending trial. Holt, in Georgia, was released on her own recognizance after initial appearance. The Seagate Archive. Gerald Moffat's original handwritten notes, the 11 pages with the crossed-out question in the margin, was formally entered into the new case file as Government Exhibit 1. Moffat himself was interviewed by Ochoa's team in April 2026, 3 months before the warrant execution. He was 81 years old. He remembered the case. He remembered crossing out the question. He said, when asked why he hadn't pursued the Panamanian routing code further, that the case supervisor at the time had been under pressure from the Miami Field Division to close the arrest phase and move to prosecution. There hadn't been bandwidth for a second track. He also said he had always thought the crossing out was a mistake. I knew it wasn't a clerical error, he said, according to the interview summary. I just didn't have a way to prove it, and I had 9 people to prosecute. Most people assume cold cases get reopened through dramatic breakthroughs. A new witness, a DNA match, a deathbed confession. This one didn't work that way. The Seagate file was reopened because a compliance analyst at a mid-sized Miami bank noticed that 3 LLCs shared a registered agent with an identical last 7-digit contact number, filed a suspicious activity report, and a financial investigator ran a database search that returned a 17-year-old archive. That's it. That's the mechanism. No dramatic breakthrough. A database search. An archived file. A match. The $61 million estimate, the headline figure, remained an estimate as of the indictment filing date. The untraced 8 accounts continued to represent an unknown additional volume. Investigators from the Miami FIU were still working the reconstruction as of mid-July 2026. Whether the true total would exceed $61 million, or by how much, was not yet known. On July 22, 2026, a federal grand jury in the Southern District of Florida returned a 7-count indictment against Castellano. Suarez was indicted on 4 counts, Holt on 2. The indictment also named MV. The third beneficial owner, last located outside the United States, as a co-conspirator. MV, remained at large as of August 1st, 2026. Will this structure be replicated? Comment why yes or no, because the correspondent banking channel that made this possible isn't unique to this case. The architecture is documented now in a public indictment. The specific mechanism, using a Panamanian correspondent routing code to move funds in sub-threshold increments through rotating Delaware LLCs, is now part of the public record. Whether that documentation prevents future replication or simply informs it is a question the financial crimes community is actively debating. The network that processed $61 million over 17 years has been dismantled. The money that moved through it, $61 million, possibly more, is not fully accounted for. The untraced accounts remain untraced. The funds that pass through them remain unlocated. MV, the third beneficial owner, is not in custody. The documents that Suarez destroyed in the minutes before agents entered his Hialeah property are gone. The warrant was cold for 17 years. The money has been cold longer than that. If you want to follow the Castellano prosecution, the trial date has not yet been set. Subscribe so you don't miss the update when the case goes to court. This channel covers financial crimes cases from first warrant to final sentence. The file was closed in 2008. It took a phone number, 7 digits, repeated across 3 accounts, to reopen it. 17 years of transactions, 1 compliance analyst, 1 SAR. The structure is down. The demand that funds structures like this one has not changed.